everybody. Welcome. I'm Jasmine Botto, Realtor with Royal LePage Sussex. And there's a picture of Colin there on your screen. I've been licensed for 20 years now. I work mostly on the North Shore of Greater Vancouver. I'm happy to be here today, and it is my absolute pleasure to discuss with Colin Lake myths about home buying. We hope to clarify some misconceptions about the process and the financing of it. So in that regard, we welcome Colin Lake. Welcome, Colin. There's her picture in front of you. Get you. There you are. And with over 3 decades of lending experience, specializing in first-time buyers, investors, and refinancing, she's highly qualified to help us bust the myths we will be talking about today. Licensed mortgage broker for over 10 years and dog lover for many more. Right, Colin?
Forever.
Previous to that, mortgage development manager at one of the largest credit unions in Canada. And her goal is to walk her clients through a memorable lending experience, recognizing that homeownership is most likely the largest investment anyone can make. She has told me she considers it her privilege to be part of this process for so many people, and we are privileged to have her join us today. So thank you for joining us, Colin. I'm sorry we can't see you just now.
I can't believe it. Well, that could be a good thing.
We hope at the end that you feel a little more empowered in respect of your home purchase, that it may feel more achievable than you first thought. And we hope this intrigues you to join us for our next session about the home buying process itself. We dig a little deeper. And as Colin says, properties are more than bricks and mortar. It's where families are grown and memories are made. And we couldn't agree more. So let's get started. Just a moment. There we go.
All right.
Myth number 1, my bank will give me the best rate. And what do you have to say to that?
Well, the bank doesn't necessarily offer the best rate up front. When you look for a mortgage broker or you decide you want to shop with a mortgage broker, we shop all the banks for you. So we will probably source out the best rate for you. What your lending institution does is they expect you to come in and do all your banking with them and not necessarily treat you like you deserve the best rate off the top. What we do is we are given all of these rates in advance, so we know what the best rate is out there. And then we put you with what we think would be the best suitable rate and product for you. It isn't necessarily all about the best rate, but to tailor a product that's right for you also. And that's what our job as a mortgage broker is to do.
Fantastic. Number 2, I will let you speak to this one also. It kind of relates to the first. I have to pay for a mortgage broker.
No, you do not. The bank or lending institutions that we deal with will pay us directly. The only time a client is charged by a mortgage broker is if we have to source out the financing through a private lender, which means an alternate lender. When your traditional banks can't qualify you, we go to what we call alternate lenders, and they charge a fee, and sometimes we have to charge a fee also, as the work we do to provide you that is not your everyday walk into a bricks and mortar place. Some people don't qualify because they are self-employed, they don't declare a lot of income, or they have damaged credit. And that's when we need to still see you in the home buying process for the foreseeable future. We normally put people that don't qualify into a 1 or 2 year term until they can turn either their credit around or their employment and then qualify with a traditional lender. So that incurs some fees to the client.
Okay. And folks, let us know anytime if you have questions. I'm sorry the video is not working on Colin's end. We'll promise to try and rectify that as we go. I'm going to show you one more screen here. Myth number 3, now is a bad time to buy a home. I'm going to speak to that one because certainly we all know that the pandemic has put a lot of people to the sidelines in our real estate market. It's put their jobs to the sidelines. It's put the social aspects of our lives on hold for a little while. And certainly I know for sure that we're getting lots of questions and resistance from people as to, you know, whether it's a good time to actually buy or sell. I will tell you, it's never really a bad time to buy a home. And there's ways to be doing it now. So provided you know what you're doing. So hook yourself up with a great mortgage broker, number one, and get some information from a realtor. In fact, now is the perfect time to have your local realtor tell you about what is exactly happening in today's market. Instead of listening to the news or the myriad of information that comes across to everybody's email these days, we have up-to-date market statistics like as of the hour, and we can definitely provide that to you. So I would say that the fundamentals of buying a home are the same as they've always been. If you can find a place that you like, you get your pre-approval, you can afford it, and that is part of what the stress test is helping us with now, and I'll get Colin to speak to that. Then maybe it's the right time for you and your family, especially if you are certain that your job is going to be, you know, consistent. So we understand that people are waiting today because they don't want to make a wrong move, or maybe they're looking to time the market differently. And so I will just show you. The big arrow points to our current inventory, which is about 60% of where we were at this time last year. So the only time that prices are affected in a very significant way is if inventory climbs substantially higher and sales drop off substantially lower, or both, and or interest rates, you know, increase in a very strong way. None of that is what we see happening at this moment. So of course, we're looking at lagging indicators here. We don't know what the rest of the month of May is going to look like. And sales will probably stay low for the short foreseeable future. But selection has improved from the beginning of the year. You can see just 400 residential homes for sale in January, and now we're over 600. So inventory has improved. And today, more than ever, interest rates are crazy low. So Colin helped me with this chart to show you the difference in the 5-year fixed and variable rates from approximately a year ago to today. And on the right-hand side, you will see the difference in interest paid over your 5-year term. So you can see that with just a slight adjustment in interest rates, you could save from $11,000 to $35,000. So today, gosh, it's just incredibly better for buyers to be borrowing. Colin, anything to add?
Absolutely. With regards to the variable rate, as you know, with everything that's been recently happening with COVID, the rate has dropped from 395 to 245. That is a 1.5 point drop. And you can see on the screen the difference in the interest that you would pay over 5 years, providing that the variable rate doesn't move. Personally, I don't see the variable rate adjusting anytime soon until our economy bounces back and people are back at work, and that's going to take a few years. The variable rate is tied into of its prime rate, and it doesn't necessarily reflect with the 5-year rate. But right now, when you have a 5-year rate, and they are dropping additionally right now, there's some rates that are 249, 259. Those are high ratio rates. It's cheap money. You can't get money any cheaper than what it is today.
Mm-hmm. Mm-hmm. It's amazing.
Yeah.
We're fortunate to be on a variable rate mortgage, and I see a very large difference in money going toward principal now. So that feels good in a time where people are certainly worried about money. I'm just going to zip down in the chat here and see if I can get Colin's video back on.
Yeah, I'm not sure why.
And then we have a question while I'm doing that. Colin, did you say that you don't see the variable rate moving up for a few years?
That's correct. I just don't see it happening. The variable rate was lower for a long time. And then, of course, the government decided that they needed to step in and put the housing market in check. And so they adjusted the prime rate up to the 3.95. Now they've got to stimulate the economy once again because of what's just happened, and they're not going to jump up again overnight. So the 2.45 I see is going to be around for a long time. And historically, the variable rate has always done better than the 5-year rate until about a few years ago. But it depends on the discount. What lenders have also done is they know that the variable rate is now at 2.45. So you're not going to get a prime -1 or prime -50 or anything like that right now. When you're entering into a variable rate mortgage, you might get prime -10 or just prime, because they just can't afford to discount it any further.
All righty. Still struggling with video. Okay, I will get back there. Welcome, David. Hello, all the way from across the big pond. I'm going to head back here and show you one more thing. We're fortunate to be working with the largest Canadian real estate brokerage nationally, and they have lots of money and time and people to get together some good stats for us. And Phil Soper, our president and CEO, is super well attuned to what's happening all over Canada. And RealPage, he says, is forecasting that if COVID-19 stay-at-home restrictions are eased during the second quarter, house prices will finish the year up by 1% year over year. And that's nationally, he's talking. If the restrictions continue through the summer, and it looks like it will be in some respect, he feels the negative economic impact is expected to drive home prices down by 3%. Now that, while it can be significant on today's average price for real estate, at least in North Vancouver, which is about $1.6 million for a detached home, 3% up or down in our market is a negligible amount overall. So that's pretty good news. And then just to what I said before in respect of our listing inventory, in explaining why RealPage doesn't foresee a large price drop, Soper went on to say that home price declines occur when the market experiences sustained low sales volume while inventory builds. Currently, the inventory of homes for sale in this country is very low, and that's pretty much across the board, matching low sales volumes as people respect government mandates to stay home. So what that means is, while there's not as many people buying, there's also not as many people selling, which should mean, if that carries forward, that prices will not be impacted too terribly much, at least for the foreseeable short future. So our next myth that we like to bust today is a pre-approval. Tell us all about pre-approvals and tell us why it means the money is not really a sure thing.
Well, one of the things that applicants have to take into consideration, especially right now, is lenders are looking at you to make sure that you are employed. So if there are changes, that your pre-approval or rate hold is more like it, that it will be adjusted also. When we do what we refer to as pre-approvals, essentially they are rate holds. And that holds the rate for you for approximately 90 to 120 days, so that you are guaranteed that rate for that time. If your personal finances change or your employment changes, you then are requalified based on that when your deal, we call it, when the deal goes live, or when you have a firm purchase agreement, or if you're looking to refinance or do equity takeouts. There can't be anything that has changed from the time of your first application. So when you talk to a mortgage broker, or any lender for that fact, what you give them at that time, those are the numbers they're working with. If it changes, then your pre-approved amount will also change. So if there's any changes by the time you start the process to when you actually need to pull the trigger on something, that's when it will change. So essentially the pre-approval is a rate hold.
Okay. And while I'm still working on your video here, did that used to be different?
Well, It wasn't necessarily different. If you get a commitment from any lender, it says right in your commitment, if there's any changes to your application, they can pull it. But right now, what we've been seeing with COVID is people were going in shopping thinking that they were going to buy something. And then every lender said, okay, we have to look at whether these people will be able to qualify once the mortgage is live. And so they now have asked for updated employment confirmation so that they're going to use your full-time employment. But if you're laid off, that's not guaranteed income because nobody knows when you're going to be going back. So that does change a lot of the process for people. But as long as nothing in your own personal financial situation changes, you'll be good to go.
Okay. Okay. Good to know. And just go back here. All right. We chose this one because it's one of my favorites, because my personal experience is all I've ever done is bought fixer-uppers. And while it has worked for me, it can be sometimes a frustrating and more expensive process. So number one, cheaper is not always better. But it could be cheaper depending if you know what you're getting into. So you got to know what you're buying. Have a good look. Have a good look at the house with your realtor when you're going to see it. Definitely have it inspected by a professional home inspector. We even have contractors that are willing to come to us and a buyer at a showing. Of course, not these days. You can't have that many people looking at a home, but down the road, we have a selection of contractors that have offered their time to come and have a good look around and talk about the potential costs of doing things. So have a great relationship with a contractor and get as accurate a budget as you possibly can, because things are always more expensive than you think. As time goes by, we just finished up a renovation, and I said to my husband, a sheet of drywall costs how much? Like, it can be crazy. Figure out what your goal is. Like, what is the goal? Is the goal to stay 5 years or more, to fix it up to make your dream house? Is it a hopeful flip in our marketplace? And then I would say plan on phasing the work. So do what you feel is absolutely necessary for you to live in at first, and then work on the nice to haves afterwards. But I would say that fixer-uppers, at least in our marketplace, often are homes that lack maintenance or have lacked maintenance over time. And that can be the stuff that is really costly to attend to. So the items that need to be fixed first are not often the pretty ones. They're the ones that you often don't see, and again, could be fairly costly. So to protect your investment down the road, if it's going to be a long-term thing, it would be important to know the things that are like more invisible, and then figure out how these improvements can be financed. So that would be my question to you, Colin, in respect of options for people. And I guess every case is different, but options for people to add financing for renovations, for example.
Again, that's a really great question to bring up, because people think that if they do need to do improvements and it's to the tune of $100,000, that the lender is going to proceed and give you the $100,000 just so you can do those. That's not how it works. They need to make sure that the renovations that you're planning to do will add value to the property. They also want to know that you have a budget. You have an appraised value. What we will do is appraise the value upon completion based on the budget, the materials, how much you're going to use. Most of the time, a lender will look at giving you the funds, but on a progressive draw basis, meaning that you have to have work in place. So they can give it to you based on 25% of the work in place or 50% of the work in place. But you have to come prepared with an outline. And if it's a substantial renovation, you may need a builder involved. But again, it just really, really depends on the amount of work that will need to go into the property. with a high ratio mortgage, meaning if a client has less than 20% down, the high ratio insurer allows a property to have improvements, and they will allow you to do up to $40,000 in improvements, for instance. But you have to have your money in hand. You do the improvements, they'll appraise it based on what you said you were doing, and then they'll advance the funds. So one of the things about doing any type of renovations is you have to have a lot of cash in your pocket to proceed.
Yeah. And it's probably always more comfortable that way too, right? A little more settled feeling.
Yeah.
All right. Just wondering if at this point anybody has any questions. Pop it into your Q&A at the bottom. I would love to answer. So there's our 5 myths, but we have 3 more for you. So want to say thanks to everybody for joining us today. And I promise to make it up to Colin because we can't see her beautiful face right now. And also,
I did my hair for this.
Oh, I feel so bad. This is my first ever webinar, and clearly the technology part I've failed miserably at. Also want to say to those that have joined us, if you'd like our show notes, they will be available on Friday, along with the slides that you see here. So I don't see any questions, so we will motor along to our next myth, which is here.
Mm-hmm.
You should choose the lender with the lowest advertised interest rates. That's my favorite.
Yeah. I'd like to say yes, and most of the times it does prove to be true, but one of the things when you're making this purchase is you really have to think ahead, because just because it might be a lower interest rate, you have to understand if you're going to be locked in for the term. Is this not only the interest rate, will you have options to pay it down? Some people come into some money where they want to be able to put 20% down or 50% down. There's restrictions with lenders with fixed term mortgages. So the lowest rate isn't necessarily always the best rate because you will be locked in. Sometimes we have lenders that say, okay, this is a 5-year term. It is rock bottom pricing. It's great for any buyer that knows that they will not be moving for 5 years because you can't get out of it or you can't refinance it within those 5 years. Those are things to keep in mind. They also, I like a variable rate right now because if your circumstances change and you do have to get out of the mortgage, variable rate interest charges, they will charge you a 3-month interest penalty. There is no rate differential. And with rate differentials, you have to keep in mind that the rate that they give you today and the rate that you may want to get out of will be entirely different. And sometimes the penalties are in the thousands and thousands of dollars. So you want to really know what your next 5 years is going to look like, or even 10 years, because this is essentially a marriage for that term.
Isn't that the truth?
Mm-hmm.
Yeah. Okay. That's a great answer because a lot of people are hung up on this. We find like, isn't the lowest interest rate best for me? And well, it's not always about just the rate. It's getting in and out of it, having it be flexible and so on. So for sure. We have a question from Tracy.
Mm-hmm.
Is it better to close on your mortgage than get a loan for improvements or get mortgage plus improvements at the same time?
Good question, Trace. It just, again, it depends on the size of the loan you're going to need. I would probably tell you to try to do it at the same time because then you get the same pricing, right, with the improvements taken into consideration. But again, it depends on how much. Some people their improvements may only be $25,000. If you're only going to use 20 of that or 15 of that, or if you need 150,000, it changes the dynamics entirely. Because once you have your mortgage set up and you're looking at 650 and you need that 650, then you're going to get priced based on the full amount. So it might be more beneficial to do it at that time.
Okay, great. Thank you. bonus myth number 2, you can skip the home inspection process. Well, we all know a lot of that went on when the market was super crazy and inventory was even lower than it is today, and houses were selling like hotcakes, and prices just kept on rising and rising and rising. And a few points in the last, I'm going to say, 5 years where that was happening, it was super obvious that prices kept rising. So for a lot of people, it made sense to just get in the market, just buy the house, worry about what might have been wrong with the house afterwards, because they knew that their investment and their equity would just grow. Like that was almost a certainty. So today, and most of the time, our market is not like that. So I would say that the home inspection process is a super, super important part of the process. Number one, because you want to know what you're buying. It's a huge investment. It's normally your largest investment. And there are some things now, if I'm not mistaken, Colin, that a lender will look at, like, for example, the property disclosure statement, and perhaps see something on there that might affect financing, for one. So if it's a strong enough issue to affect your financing, wouldn't it be a consideration to go ahead with that home inspection, make sure you're protected? Home inspection can point out health hazards, safety hazards, generally improper additions and alterations. So every municipality will have a public record of permits taken out on property. If there aren't any, and a home inspection finds sort of some wacky wiring, for example, you want to know that you're protected, you want to be able to get it fixed, or at least go back to the seller to have them fix it. A home inspection will also help you plan for future costs. So if you're fine with the inspection generally because you're buying a house that was built in 1974, and you know that along with that comes the need for alterations and things down the road, then at least you can set out a timeline where you decide, okay, this is priority A, this is priority B, and this is priority C, kind of nice cosmetic thing to have. So a home inspection will definitely help you with that. And most home inspectors that we recommend, and we've worked with quite a number of really good ones, they provide you with a large binder or book, reference book, and they also offer their phone number to you and say, call us anytime during the life of your home ownership with this particular house. So it's a hugely valuable thing to have for planning. It can also determine deal breakers, like if there's something that's an absolute non-negotiable for you, safety-wise or health-wise or anything like that, then it's valuable for that reason. And certainly there have been things that will complicate your insurance, complicate your ability to get insurance. So those are the things that can be pointed out via home inspection as well. And of course, number one, protect your investment for you and your family, so that hopefully by the time you decide to make a change, you'll be actually able to make some money on your purchase. Let me just see. No question? All right. Well, our last myth, you can't buy a home if you have student loan debt.
Yes, you
What do you
can.
have to say about that?
Yeah, you can definitely buy a home with debt. One of the things that lenders look at is your overall debt load. And we have what's called ratios that we fall within, which are your housing costs and then your total debt cost. And with housing costs, it's your shelter costs that we look at, which is what will support your mortgage. It is your mortgage, your heat, your property taxes, and if you're buying a condo, your condo fees. So that is your shelter cost. Your total debt cost is that plus any debts that you owe. So we do, if you have a car loan, if you have a student loan, if you have an outstanding credit card, those are all taken into consideration. So you can still buy a property. And one of the things that a mortgage broker does is once we look at your credit report, we can come up with solutions on how you can still proceed if you do have some debts that are outstanding. Sometimes I say, well, why don't we consolidate this before you move forward so that your ratios fall within line? Again, it's why you deal with a professional who's been lending for a long time. But just because you have any unsecured debts doesn't mean that you're not going to get a mortgage.
Okay.
Mm-hmm.
I thought we had another question there, but we don't. Oh, hello.
What did you just did something.
Everybody, meet Colin Lake. Oh my goodness. I'm not sure what happened.
Yeah, you changed something. I think you made me the host.
Okay, good. Well, that worked. Oh my God. Anyway, hello. Thank you so much. Thank you. It doesn't appear that, oh, maybe we do have one more question. Let's just see. Oh, Tracy's saying hi. Awesome.
Hi.
Well, thank you, Colin. Gosh,
oh, I'm so excited.
Your expertise.
Yeah.
Thank you. Is there anything that you'd like to say to people in closing? We are going to show you Colin's contact information at the end, so you can see how to reach her, and we'll follow up with everybody that's attended here today. But any closing remarks?
So for me?
Mm-hmm.
Oh, now that I can see everybody, or at least see you, I would think that when you are making a purchase of this size, without saying you should go to a mortgage broker, you really should engage in a mortgage broker.
You should.
Because we do all the work for you. You don't have to walk into an institution and do anything. That's our job. And again, what we do is we make sure that the process for you is as seamless as possible. I've had clients I've worked with for a very long time that continue to come back because it is so easy. You don't have to worry about being given the best rate. We will get you the best rate because that's our job. And we want to make sure it happens for you. The other thing is we want to put you in the right product. We want to make sure you're not in over your head. One of the first questions I always ask my clients is, how much do you think you're going to be able to afford? Because you have to still want to live within your means and travel and do all that fun stuff. Some people even like to eat occasionally. So just because you get a really large pre-approval, is it what you want to put out there for it? You know, you can get a pre-approval for $800,000, but you only want to pay a mortgage that ends up being $6. Those are some things that a mortgage broker will go through with you. So,
and it can all be done remotely, yeah?
Yes, everything. I do a big majority of my business is through, remote contact because people are busy. We also work like realtors hours. So we will, it's a Sunday, it's the evening, it's whenever it's convenient for you. And money is cheap right now. It's just the best time to look at something that you can afford and live within your means. That again is the stress test. Just because it's a low rate, one of the reasons for that stress test is to make sure that if rates double, you're still going to be able to afford it. Right.
Yeah, it was a bit of a shock to the industry at first, but like with anything else, we've all learned to sort of pivot and adjust to that, and especially the buyers. And Canada is known for its conservatism in that way, which kind of saved us in 2008, 2009, I feel. And just a reminder to everybody that's listening, your bank, as you know, you may have been a customer there for 20 years or 15 years, but they can only source their own products. A mortgage broker can source a vast array of products for you to find the one that's right for you. And like we said earlier, it's not necessarily about the lowest rate. Right?
Absolutely. Yeah.
So, well, thank you. Everybody's needs are different. We'd love to chat virtually with you about your individual situation. If you or someone you know is thinking of buying now or in the near future, we can help. And we will post Colin's contact information next, if I can do that here. Colin, thank you so much. Thank you.
Oh, my pleasure.
Sure appreciate your time.
I love it.
Fantastic.
It's nice to see other people's faces.
Yeah, indeed. Let's do it again.
You bet. Thank you.
Take care.
Bye.
There we go. Bye, everyone.
Bye.
Thanks for joining.